Morning, Steve Free in Chicago with the morning grain comments. Kind of a mixed tone overnight. I think one of the big events was it was cold over the weekend, and we saw some temperatures drop below freezing in parts of North Dakota, South Dakota, Wisconsin, and Michigan. I don't think the corn crop is far enough along to cause any problems, but certainly grabbed some people's attention. As far as the other news, Goldman Sachs came out and said they're looking for higher crude oil prices due to the drop in global supply. This is offering some support to the crude oil market, which might be helping beans and also might be helping the soybean oil market. As far as the rest of the week, 6 to 10 day and the 8 to 14 day is the same. Normal to above temps and normal rains. We're watching some heavy storms moving across the southern third of the United States and see if that has any impact on crops down there. But overall, we continue to have this in the back of our mind that this summer should be warmer and drier than normal. So we'll see if that kind of changes things from what we see now to what we see down the road. Today we've got a couple of reports coming out. First, grain inspections. The corn numbers this time of year tend to slip a little bit lower. Last week we did 45 million bushels. Last week we only did 5 million bushels of beans. Last year this time we did 12, and wheat was a pretty good number last week at 18 million bushels. We tend to drop off a little bit last year at this time as we go into the end of the marketing year. We will have a private estimate of acres come out today by one group. It's interesting that most people are looking for acres for the corn to drop about 1 million from the USDA's March intentions. That's still almost 5 million acres more than last year. For the beans, everyone's expecting maybe 1 million, 1.5 million acres more than the government intentions, and that also would be about the same above a year ago. So we'll see if that increase in bean acres has any impact on the long-term bullishness bias that they have with the lower South American crop helping our demand. We'll also be seeing the USDA reports on planting numbers. Corn should be 74 to 78 versus 81 average. Beans 33 to 37 versus 39 average. NOPA crush comes out, should be around 148 versus 150 last year, and we'll see if the soybean oil stocks are still higher than a year ago. So anyway, funds just last week, they came in and they added to their bean and meal longs, reduced their corn long more than expected, and added to their wheat short. So in general, you're going into this growing season with the funds long bean, short wheat, and probably just a net nothing position in the corn. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.